Ever feel like the world of investing is just kind of designed to make your head spin?
Yeah.
Like you're the only one who doesn't get it.
Right.
Yeah, you're not alone. That's where SOS Finwall comes in.
Exactly.
They've made it their mission to like decode finance, especially
Yeah.
for folks who are newer to investing.
Yeah, makes sense.
So today we're taking a deep dive into one of their reports
Okay.
that aims to simplify this specific investment opportunity. The ICICI Prudential Nifty Next 50 Index Fund.
It's a smart move on their part.
Oh, yeah.
This particular fund, I think, is generating a lot of buzz, but it can be pretty tricky to navigate if you don't have all the pieces.
Yeah, you're telling me.
I thought...
Even with a little experience, I'm eager to unpack this one.
Right.
So first things first, who is ICICI Prudential AMC, and why should we care what they have to say?
So in Indian finance, they're kind of a heavyweight. They manage assets worth over 5.3 lakh crore.
Wow.
Which is
Okay.
a considerable amount.
So not your average neighborhood investment firm.
Yeah.
They put together this report, and it's all about this Nifty Next 50 index fund.
Mm-hmm.
So break it down for me. What's the elevator pitch for this fund?
Imagine you missed out on investing in like all those big name companies that everyone knows.
Yeah.
This fund is like getting a second chance, but with the companies that are poised to be the next generation of market leaders.
Right.
It tracks the Nifty Next 50 index, which is, you guessed it, 50 companies just below the Nifty 50.
I see. So you're like capturing that growth potential early on, kind of before they hit the big leagues.
That's the idea. It's a strategy that appeals to investors who are looking for like long-term growth, but maybe with a little more risk appetite.
Okay, speaking of risk, the report highlights some impressive past performance for this fund, but I know better than to take that at face value.
Right.
Past performance isn't everything.
Yeah, it's a bit like looking in the rearview mirror.
Okay.
Tells you where you've been, but not where you're going.
Okay, so past performance isn't everything. What should we be paying attention to when we evaluate a fund like this?
There's a few key things, I think. First, we need to understand how this fund manages risk. Like, how does it deal with the ups and downs?
Okay.
And that means digging into things like standard deviation, the Sharpe ratio.
Okay, let's unpack those.
Yeah.
I have a feeling you're about to make them crystal clear for us.
I'll do my best. And to understand those, I think it helps to understand a little about who is actually calling the shots, the fund manager himself. So think of standard deviation like measuring the ups and downs of a stock's price.
Okay.
A high standard deviation, that's like a roller coaster.
Yeah.
Exciting, but maybe not for everyone.
Right, right.
This fund, I would say, it falls somewhere in the middle.
Okay.
It's not the most volatile,
Okay.
but it's not the safest either.
Got it.
Reflecting those companies, big growth potential, but also they could go down too.
Okay. Got
Now, the Sharpe ratio is like a measure of efficiency.
Okay.
How much return are you getting for the level of risk that you're taking on?
Right, right.
And in this case, the fund has, I think, a respectable Sharpe ratio. It's not amazing, but it means it's probably delivering decent returns relative to how much it jumps up and down.
Got it. Efficiency is key.
Exactly.
And speaking of the people making the decisions, the report mentioned the fund manager, Mr. Sankaran Noran.
Yeah.
What's his track record like?
So Mr. Naran and his team, they're known for a very, I would say, disciplined approach.
Okay.
They're not trying to pick like the winners and losers. They're not trying to time the market.
Right.
Their strategy is to stick pretty closely to the Nifty Next 50 index.
Okay.
Which, makes sense given what they're trying to achieve.
Right. So they're playing the long game,
Yeah.
letting the growth potential of those 50 companies kind of do the heavy lifting.
Exactly.
Got it.
Now, before you, jump in with both feet, we should talk about like the cost of actually investing in this fund.
Ah, yes. The fees.
Yeah.
Always important to factor those in.
So the report highlights the fund's expense ratio,
Okay.
which is basically the annual fee you pay for the fund's management.
Okay.
And this one, I will say, is on the lower end, which is good news.
Lower fees, more money working for me. I like the sound of that.
Exactly. And
Yeah.
to really understand where your money is going, I think it's helpful to kind of peek inside the fund's portfolio.
Okay, let's do it. What kind of companies are we talking about here?
Picture this. A basket, right, filled with companies from sectors like financials,
Okay.
consumer goods,
Right.
technology,
Okay.
all areas with huge growth potential in India. So
Yeah.
you'll recognize some names. Avenue Supermarts,
Okay, yeah.
that's D-Mart.
Right.
Apollo Hospitals,
Big one.
ICICI Lombard.
Yeah. Yeah. Okay.
These are big companies.
It's fascinating to see how a fund like this gives you a slice of so many different companies.
Yeah, diversification is it's a powerful tool, I think, for managing risk. And speaking of risk, one thing to note is that the fund has what's called an exit load,
Okay.
but it's only if you sell your units in the first 30 days.
Okay. So it encourages a longer-term outlook, which really aligns with what we were saying about the strategy.
Exactly, exactly. And speaking of long term, let's talk taxes.
Okay.
So if you hold your investments for over a year, you get taxed at a lower rate,
Right.
which is, again, another point in favor of just, holding on.
Patience is a virtue,
Yes.
especially when it comes to investing. Now, I can't help but notice this fund has a massive, I think it's 5.3 lakh crore
Right.
in assets under management,
It's a lot.
AUM. What does that tell us about this fund?
Well, that's a significant amount of money, first of all.
Right.
And it kind of indicates a high level of confidence from other investors.
Okay.
It suggests that people believe in this fund.
So it's almost like a vote of confidence from the market itself.
In a way, yeah. But, it's just one thing to consider.
Right, of course, of course. Now let's cut to the chase. Who does this report say this fund is right for? Who should be picking up the phone, calling their financial advisor about this one?
So the report suggests that this fund is, I think, best suited for investors who have a moderate to high risk tolerance.
Yep.
And a long-term investment horizon, so at least 3 years, ideally.
Okay, and why is that?
So remember, we're talking about the Nifty Next 50 here.
Right.
These companies, they're still growing,
Yeah.
which means their stock prices, they can be more volatile than more established companies.
Okay, so you need to be prepared for the potential roller coaster, but also the potential rewards down the line.
Exactly, yeah. If you're looking for a quick return, this is not the fund for you.
Got it.
But if you're willing to kind of ride those waves, it could be a really good way to be a part of India's growth story.
It's about embracing that journey, not just chasing the destination.
Yeah, exactly. And, for those who like to compare, the report also mentioned a couple other Nifty Next 50 index funds. There's one from HDSC, and then there's the Nippon India ETF Nifty Next 50.
It's always good to have options. So as we wrap up our deep dive into this report from SOS Fin, well, what are the big takeaways about the ICICI Prudential Nifty Next 50 Index Fund?
So this fund, it gives you a way to invest in those emerging companies in India.
Right.
Those companies that could really take off in the next few years. It's diversified.
Uh-huh.
It's managed well, I think. And it has a pretty low expense ratio.
Sounds like a pretty good package.
Yeah, but it's not without risks, right?
Right.
These companies are still figuring things out.
Yeah.
So their stock prices, they can move around a lot more than those big, well-established companies.
Right. It's okay.
So this is really for someone who's planning to hold on to it for a while.
Someone who's not afraid of a little bit of a wild ride.
Exactly.
And that's where I think that long-term thinking is so crucial.
100%. One of the things I appreciate about this report is it encourages you to think about more than just the quick buck.
Right.
It's like you're investing in the future of India, basically, and that takes patience.
You got to ride the waves a little bit.
Exactly. So, as you're thinking about your own investments, ask yourself, do you believe in, India's economy in the long term?
Okay.
Are you okay with a little bit of risk to potentially make a lot of money?
Those are thought-provoking questions for sure.
Yeah.
I encourage our listeners to really explore them. And for those who want to go even deeper, be sure to check out SOS Finwell. Right.
Yes, definitely.
For more information. They have personalized guidance. They're great at making finance less intimidating.
Yeah, they're a really good resource for anyone who's, just trying to figure this whole investing thing out.
Yeah, absolutely. Couldn't agree more. So on that note, I think we'll wrap up this deep dive
Sounds good.
into the ICICI Prudential Nifty Next 50 Index Fund. Until next time, remember, the journey to financial well-being, it's best taken one step at a time.